Welcome to Building Wealth, and in this video we're going to go over some chart patterns. We're actually going to start with the head and shoulders pattern and show you how to utilize it, how to look for it, and how to place targets with it. Alright, before we begin, I want to point out that I am not a financial advisor. These are my own thoughts and opinions, and these are trade setups I am sharing for educational purposes only. Okay, so what we're going to do is we're going to go ahead and get started in Paint. I think that's going to be the easiest way to kind of go over the basics of it. And then what we'll do is we'll look at some real-world applications. I'll show you some previous charts that I've traded that, have perfect examples of what a head and shoulders pattern is. So to start off with a head and shoulders pattern, basically you're looking for a high, comes back down, creates a higher high. After that comes back down, and then for the next, we're not able to make a higher high. We come up short. At that point, what happens is we come back down, and then we've got a neckline. Let me go ahead and draw that out here. So pardon my mouse drawing, it's not that great. But what happens is we test this neckline. If we break through this neckline, typically what happens, we'll come down, find a little support, come back up, retest the neckline, and on down we go. The way we figure out the target for where it's going on the downside is we're going to measure from the top of the head to the neckline. And that's going to be the move from here to here. That's perfect world scenario. It can go further. It cannot reach target. So don't get hung up too much on those. But what we want to do is we want to understand the concept of the head and shoulders pattern. And there's a couple of different ways of trading it. One, some people trade the breakout. Not always the best idea because it will come back and back test the neckline typically. Not always. But if it does, what if it breaks back up above the neckline? And it might just be making another shoulder and coming back down, or it may be part of the continuation to the upside. So I've seen that happen before. I've also seen it hit the neckline and bounce back up. What a lot of traders do, though, to trade it before the breakout, let me back out of some of this, is if you put in a trade right here just as it's coming over and put a stop loss up above this shoulder here. So what happens then as it comes down, one, you can take profit at the neckline, and then if it breaks through, you're good to go. If for any reason it invalidates, it doesn't come down here and bounces back up, or it hits the neckline and bounces up, it's going to hit your stop loss. So it's kind of the safer trade. So it's kind of up to you. You can play it different ways, whatever works best for your risk management. Let's go ahead and look at real world application here. Okay, so first chart we want to look at is Intel. This was actually during Intel earnings, and it wound up being a heck of a play for me. As they were coming into earnings, it was the day of, saw potential head and shoulders pattern, and I went ahead and set a target actually, where was it? It was right around $52 is where I originally set my target and bought a bunch of puts in that area. Way out of the money. So, of course, when that hit, that was a huge payout. So what we're looking at here is it came up, made a high, made a higher high, made a lower high here. This was actually the day before their earnings. So as I mentioned previously, you can set a play here and then have a stop loss just above the shoulder. So, I mean, doing puts, that wasn't really the thing, but that is an entry point. And what happens then is it'll come down and break through. Now, the fact that it was earnings, this move was all done overnight. So the next morning, we're opening up down here and continuing down. So, as I said, heck of a play. But the way you would figure this, we've got the shoulder, the head, the shoulder. Go ahead and take a measurement from the top of the head down to the neckline. Run that from the neckline right down to that green area, which it definitely went below a little bit. So, you know, perfect real world example and something to keep an eye out for. Again, very easy to play, but something you want to look out for is you can see this pattern a lot. Doesn't mean that it's always going to play out. So you don't have anything until you have confirmation of the neckline breaking. So that's where you want to actually run your plays. As I said, you can do it if you're going to keep a tight stop loss, but as I said, with running puts, that's not going to help you. So just be careful if you're shorting, stop loss if you're doing it up here, or wait for the neckline to break and then back test. And then once we have resumption, that's where you want to go ahead and put the play. So let's look at another example. Let's go to Bitcoin. Got a couple. God, I got a lot of stocks I look at on a daily basis. Okay, so this is a very recent one. Let's go to the 4 hour. I think that would look better. This is another one that I just played out. Okay. So Bitcoin, maybe it doesn't stand out as much as that last one on Intel, but same idea. You got your high, got your higher high, then you got your lower high. And if we go ahead and measure that out to the neckline down here, right there, so it wound up hitting it right in here. So again, that was a perfect play. It doesn't mean that it's going to be perfect every time. A lot of times it'll fall short, bounce back up. Again, this was another one that did not give us the opportunity to have a back test and then resumption. So, you know, this one you kind of had to be in it up at the top of the shoulder. Again, make sure you're using a stop loss because if it goes against you, it can go against you fast. So just keep an eye out for those, but perfect play there. Let's go to an older one. Let's stay with crypto, Ethereum. Where did we go? Let's go to the 1 day. That was back in 2018. Here we go. Got a lot of trend lines on here. Support and resistance anyway. So here's one back in 2018. Actually, there was two of them. You had your shoulder. You had a high, a higher high, and then we were never able to get back above there. What happened? This neckline here broke, came on down. Now, it continued a trend on down, and then what did we get? We got another high, higher high, lower high. On down we came. Which actually what happened is this one broke down, and then it broke down from support here and just continued. So that was a really nasty one from back in the day. Don't know if you're trading crypto in 2018, but that was about all you could do was to short positions. So not a lot of other options there. Now there is the inverse of what we were just discussing, which is the inverse head and shoulders. I'll give you an example of that one. Let's look at ROKU. This was a play that I made not too long ago. It's the exact same idea. Here, let me zoom out. Exact same idea as the head and shoulders, just in reverse. So basically what you're doing is you're making low, lower low, going back up, and then a low that's not quite as high. And this is one that I actually saw back here, and so that's why I had this trend line here. Whenever it touched, that's where I was going to put in my trade, and that was a huge one. Great growth on there. It took profit right here at the neckline, and then I also took profit. It was right around up here, but of course Roku decided to continue on going later on, but I was completely out of that trade at that point. There was nothing more to really aim for. You didn't have a target or an edge, so staying in the trade just wouldn't have been beneficial. So these are just a very simple trading pattern to look for. I'm going to go over additional trading patterns over time in my videos, but since I was just talking about one, which was QCOM, that was in an earlier video, realized that maybe not everyone knew what a head and shoulders was. So this one, we've got the head and shoulders, left shoulder, head, right shoulder. We have hit the neckline. We actually broke below it. Let me pull up the 4 hour. It's ridiculous. So yeah, so came down, broke below, broke right back up, and in fact, hold on, let's pull up these moving averages. There was, let me go back to the daily. Yeah, so it hit the 50-day, broke up, broke down again, hit the 50-day, broke back up. So still in the trade. I haven't exited. In fact, I actually reloaded here. If we break up above this shoulder here, I'm going to be out of this trade. But at this point, it's just becoming more of a complex head and shoulders. We still have this gap way down below. Lots of reason for this to break down. A lot of it's going to depend on what the market decides to do. If the market breaks down, yes, this is going to really come down hard. If the market decides to make a run up, then this will probably invalidate and I'll be out of the trade at that point in time. But again, it's just a very easy pattern to see. So wanted to share this with you guys. I'll be talking about some other patterns in the future. If you like the video, please like and subscribe, share the video, and I want to put out a lot more content. So fairly new to this. It'll get better as we go. But again, thank you all, and I'll see you in the next video.